Welcome to the Asset Revolution podcast, where each week your hosts from Arbor Digital provide educational opportunities for financial advisors and individual investors to gain knowledge in this emerging powerhouse that is digital asset investing. The Asset Revolution podcast is your connection to the future of digital assets and an opportunity for anyone to get off zero. Let's dive in. Alrighty, welcome back to the Asset Revolution podcast. Today has been an episode that I have been looking forward to since I think March, when I reached out to Michelle, who was our guest today, about coming onto the show. I am currently going through a designation program that's connected to the organization she is from, and I'll let her do the introduction. But today we're going to dive into a wide range of topics around digital assets, some about education, some about credentials, some about working groups, and really focusing in on the institutional side to see what work is happening behind the scenes, behind the headlines and behind the price movements. So, and then we're also going to talk maybe a little bit about women in blockchain and crypto, because I think there's an important shift we're seeing, and I'm hoping that we start to see some differences there from the traditional world that we're seeing in the new world, or this new economy that's being created. So without further ado, Michelle, welcome to the podcast.
Thanks so much, Mark, for having me and, for your patience with me and making it through our big conference last week. But I'm super excited to be here and talking with you and your audience.
Well, yes, and we're going to dive into that conference and so many other things. But first, why don't you just give the audience an introduction of yourself?
Sure. So I am the head of Americas for the Alternative Investment Management Association, or AIMA, and we'll get into what that means by day. I've been with the association for 10 years. Prior to that, I worked at an asset management shop in Sao Paulo, Brazil. I started my career in this industry, organizing investment conferences with a big focus on Latin America and a big focus on hedge funds. But it was a really circuitous route. Funnily enough, while my career has taken me all over the world, I'm like 10 miles from where I grew up in suburban New York, so back home. But it's been quite the journey.
Well, I can only imagine, and I love it's taking you to so many different regions of the world. And I always love bringing on guests who have some connection back to the East Coast in New York, because that's where we're from, my wife and I, with some experience there. But
when you identify yourself by highway exits, it's exactly. It's real.
Yeah. Oh man. And then so I'd love to, before we kind of go into it, take us through a little bit too. So where are you based now? I know we've been all working from home. I'm in my home office in Austin. Where are you at today?
So today I am pretty much in the heart of Manhattan in our office on 49th Street, just catty corner from Rockefeller Center, which is always fun. I was walking to a meeting last week and just happened on a Harry Styles concert. So it's always an adventure here in the city. Although these days we are a lot more flexible. So, often also up in the suburbs and, frequently out in Greenwich, Connecticut, where a lot of our members are as well.
Mm-hmm. I remember doing a tennis fundraiser there one time for a couple other funds that we knew we had connections with. So very fond memories of Greenwich.
There's actually a pretty vibrant digital assets community up there. So the first Mondays of every month, there's a vibrant crypto Mondays Greenwich, which, again, gets some really interesting parallels to hedge funds, which, I joke that Greenwich is sort of their ancestral home. So,
yeah. And it's interesting to see that because we're seeing a lot of the same things here in Austin. Austin has a very vibrant community around that too. You have your institutions who are managing and getting together these groups of people. So, I'll be curious to talk more about that. But I guess what I'd like to do to kick things off here is introduce us, because I think a lot of the audience may not know a lot about AIMA. So introduce us to AIMA, what's the mission, who you are, and what do you guys do?
Yeah, so AIMA is the Global Not-for-Profit Membership Association for Alternative Investments. Really, when we got started back in 1990, it was all about hedge funds, and hedge funds were really early. I mean, I know here in crypto, we always like to say we're early. It was early then, back in 1990. And, there were a lot of investors who didn't really know what hedge funds were. It was a sort of clubby group. So really started as an effort to demystify and educate. One of the first notable pieces of work that we put out there was a standardized due diligence questionnaire, which made it easier for investment managers to present what they were doing. It standardized the request from investors to ask questions. I think the earliest edition was like 10 pages, and everyone complained how intrusive it was, and if only they knew. But certainly our association really evolved during the financial crisis. And when we saw a lot of new regulation come to the industry, it was important that the industry had a voice and was able to react as part of that process, and then also educate our members about their newfound obligations, particularly on a global basis. And this is really a lot of AIMA's edge. So, while I sit in New York, we're actually headquartered in London. And then we have staff all across Asia. So we've been in Asia since 1998. And then here in the Americas, which is the region I had, we're in New York, DC, and Toronto. So it's very, very global. And, we tend to get to be really particularly helpful where there's cross-border issues, whether folks are trading different markets, raising capital in different markets, opening offices in different markets. It's not really straightforward. So, the financial crisis, this regulation, a lot of it had a big cross-border remit. So we're really instrumental in working through that. And that really just reshaped the nature of our organization. Now, over time, hedge funds have always been hard to define, but there's a bit of an increased scope in the sorts of unconstrained alternative investments that they made. And over the years, we have added on a focus on private credit. So we founded the Alternative Credit Council in 2014 to really look at the specific needs of that constituency. And then more recently, and I know we'll get into, digital assets has been at the forefront. So as an association, really, there's a lot of work that we do on behalf of industry. We also just try to be really helpful to our members who are by and large investment managers. We also do have some asset allocators as members, and then all of the different service providers that keep us running and ticking. So, we try to look to their businesses and understand the challenges that go into investment management that aren't investing, but all of the operations and the compliance and investor relations and all that. And most of these businesses are relatively small. So being able to set up peer-to-peer connections between those firms so that you can understand just what is everyone else doing, how are they approaching shared challenges, being able to have a place to turn to with questions is so important. So that gets into peer groups, events, sound practice documents, a whole suite of due diligence questionnaires, really everything just to make ourselves additive and supportive in our members' lives. Beyond that, we also do have education as that tenant, and we produce a lot of our own research, but we also co-founded the Kaya certification, which I know you had alluded to in your opening. Really glad to hear that you're going after that. I actually first came to AIMA through Kaya. So I was living I knew a member of the staff because back in my conference planning days, I would do these conferences on topics like 130/30 investing and hedge fund replication. And I came across this gentleman whose business ended up being acquired by Kaya. And we would work together on various pieces of research and content. And then when I moved to Brazil, Kaya was opening a testing center in Sao Paulo. So started volunteering with them. And then when AIMA started getting involved in the Brazilian market, that's how I got involved first as a member and volunteer, and then coming back to the US 10 years ago on staff. So special place in my heart for Kaya. And I went through the process, about 11, 12 years ago at this point. So well worth it.
Wow. It sounds like there's a lot of things that have come full circle, and I appreciate you going into the depth and breadth of the AIMA organization, help people make a connection, kind of what place and what role that you're currently playing. So I'd like to kind of shift now too, and I'd like to share more, maybe start off with the personal side.
Yeah.
Because such a robust and rich history in traditional world and traditional markets. I see that, and one of the things, I guess before I want to do that, I do want to say that part of the things that attracted me to AIMA once I started going through the Kaya studying program and I came across AIMA was this idea of community. as well. You mentioned peer-to-peer. And I remember being a consultant to financial advisors, one of the questions that they always ask is, what's everyone else doing? What are the top, especially when you talk to your top 1%, your top 5%, your top 10% of performers, they're always curious. They're always looking to make sure that they are staying up to speed on what's happening and how the best ways to conduct their business. So that's one of the things that grabbed me about AIMA. So getting you on, I didn't know we were going to be able to get someone like yourself on, and I thought I was going to have to talk to somebody else. But so this is a real treat. But now I'll move on to the actual. Let's kind of keep this conversation going. Take us through the personal journey into digital assets. Were you aware of it when AIMA started creating content, or this watch group, or maybe take us through the watch group? How did you personally start hearing about digital assets?
Sure. No, and the fun part of this virtual world is relying on internet. So hopefully I didn't lose you when I glitched there for a second, but digital assets have been fun. So actually, back in my conference planning days, I had a colleague who was super early on crypto and Bitcoin. And I actually just dug up an email from 2011 where he was promoting Bitcoin, and sad to say, did not buy at that point, but it's been on the radar for a while. And I remember, various podcasts talking about it. I remember an early Planet Money episode that caught my attention.
Mm-hmm.
I think it was about around the time of the pizza, which was like 12 years ago, maybe a day or two ago. So it's something that's always captured my attention, new and novel. I started in 2017, really, we had individuals at AIMA member firms, because AIMA as an association, unlike Kaya, which is individual, AIMA is only corporate membership. But folks who were very active and familiar with our organization left their jobs, saw the excitement in digital assets, wanting to start crypto funds, which at that point was probably largely Bitcoin funds. And, again, get access to that due diligence questionnaire I referenced and really help institutionalize this space. So at that time, spent some time with it, would organize regular calls, hosted a couple of panels, because back in the day, we did these things in person, arranged for one of the keynotes at one of our biggest pension fund conferences to talk about digital assets and crypto. So it was on our radar. But then it's, before it really took off in a meaningful way, we entered crypto winter, and it slowed down a bit. I got busy with other things because there's so much happening in the alternative investment space. But, really in 2020, it came back, in a really interesting way, right? We had not just those boutique firms who were now larger and arguably doing more interesting and diversified strategies, but we also had some of the biggest names in hedge funds start investing, and not just their personal wealth, but their funds. So suddenly it was this thing that was really quite relevant to some of our core members, and something that really needed to be addressed. So that's when it got back on my radar screen. And again, it was more from a research perspective, and should really do something about this. And that's when we really kicked off our digital asset working group, or our DAWG initiative. So this had been, similar to sort of the 2017, 2018, one of my members had been running a regular call group called DAWG. And in late 2020, when we were looking to get this back off the ground, I offered the opportunity, if he didn't want to run that independently and take on the admin work, he can bring it inside AIMA and then be a chair of the group, which he happily accepted.
Yeah.
So that was John D'Agostino, and he's now a chair of AIMA DAWG. And, it's formally been running since January of 21. So we can talk about everything that's happening with that group, but, have been spending not all of my time, but a good amount of time since then. But, on the personal side, it really was a personal curiosity for a while, and I followed it. But I think it really does, you start to experience it and feel it in a different way when you actually, take the plunge and start gaining exposure. So for me, it's been a fun journey just to figure out what DeFi, what that is, have your non-custodial wallet and experience the pure terror of moving something from a hot wallet to a cold wallet and ensure it gets there. I think NFTs have been a really fun space for me to experiment with. So, before I got into finance, I actually have my master's in comparative literature. So super linear, straight path, right? But always this idea of culture and art, and obviously having a career in associations where it's literally about community. The community aspect of that has been really fun and compelling, and a really great way to understand this stuff on a just on a deeper level. So you have the institutional side, which I deal with in my day job, but then also just really getting involved in it. And it's been fun. And, I have 7-year-old twins and they're excited and learning about NFTs as well. And, I got them Procreate so they can go make some digital art. I've been too lazy to mint it quite yet, but we'll see.
Wow. So I feel like we can take this conversation in about 12 different directions now. But one thing I guess is really important to highlight here is the depth and breadth of, the unique experience that you bring, actually having that, day-to-day experience of working on the institutional side. But then also it sounds like you have this deep personal, or maybe not deep, as much as you can go into the space on the cultural side, because that is fascinating. The crypto is bringing, not just from an investment or a finance perspective, but just in how do we bring together communities, how do we bring together people, and how do we align incentives across all of these different places. So it's really fascinating. I agree. The word is fun, and
Yeah.
it's interesting. I don't know if you're seeing this, based in the groups you're seeing. Regardless of what price does, we've been in pretty rough markets recently. We're recording May 25th here, so it's been a rough last couple of weeks. Have you seen anyone really get deterred by what's been happening recently, or are they continuing to build?
They're continuing. I think there's a lot of building. I mean, I think what's different about this downturn, and I should probably preface by saying, of course, nothing I say is financial advice. And if you've followed my career path, I actually, I do have my Kaya designation, but I am not an investment professional. But something that is notable is how much money has been deployed in venture capital, which is essentially permanent capital in a lot of these projects. And that really is one of the things that makes this bear market, different than some of the previous ones. So there's a lot of excitement about building. I mean, a lot of folks point to how some of the best innovations of the next cycle come from that drawdown. And, I've seen that on both sides, right? Of course, volumes are down tremendously, but activity, if you look on crypto Twitter, NFT Twitter, Discords, these communities are still vibrant. Folks are finding ways and finding things to do, which I think keeps it really interesting. And institutionally, I mean, the pace of conferences hasn't slowed down. The pace of education, I think, again, people are seeing this as a longer term trend, right? The money that has come in, and also importantly, the talent that has come in is really striking. So it's not likely to go to zero. So, a lot of folks are spending the time doing the work, underwriting their analysis, seeing what changed, what new risks have been unearthed, if there's new entry points. But it's, if you are interested in crypto and have looked, you recognize that these cycles do come fairly regularly. So, you
Yep.
can't expect the upside that we've had without the downside as well.
Yeah, absolutely. And those are great things to mention. And it really aligns with what we talk a lot about here on the podcast and with our clients. And it's been interesting to see that clients who have invested, and maybe this just speaks to, how conservative we are as a registered firm, to how much, expectation setting we have to do. And, a lot of the questionnaires and a lot of signatures and a lot of things to make sure we're protecting ourselves as well as the clients. They understand. And, we've had a big drawdown since, even our earliest clients back from 2020, they're more, hey, I kind of want to add some money now. Is this a good time? And it's really been interesting to see that across all of these phone calls where people's energy hasn't really dissipated. The ones who, see it as this long-term play. So it's interesting that you're seeing that too on the institutional side. So I'd love
And
to.
also, I mean, I think it's important to remember too, obviously, this volatility is not limited to the digital assets market. So you're seeing it across traditional equities and traditional financial instruments as well. So there's, you know,
Absolutely.
it,
It's given us a great chance to, really go to people's financial plans. And that's where it all goes down to. Obviously different from the institutional side, but it really just comes down to planning. And a lot of the clients we bring in is, we are very, very, adamant about going through those types of planning processes well before you allocate any dollars. So I think that also helps. But you mentioned some of the conferences. I recently just came from Permissionless that was in West Palm Beach, and I know there was another event that you were at. Before we get into that, though, I would love to kind of talk about I'm kind of seeing what I get excited about a little bit. So just a full disclosure, I grew up in an all-female household. So a single mom. I am a twin, by the way. So kudos to you. I can only imagine the chaos that's in the house because I was a twin. And so I have a twin sister. She's my best friend. But I think the thing that's kind of bothered me and the thing that I've always struggled with being in finance for the last, almost 10 years now, is that traditionally it's been, that kind of boys club. And what I like, or not like, I love about what I see in the energy that you put out there and the work and the genius is very focused around, let's kind of flip that on its head. This is an opportunity to be a more inclusive industry. So I'd love to get your perspective. Do you see a lot of women building? Do you see more of that? Give us your perspective.
yeah, no, it's such an important point. And, I think there's real challenges when it comes to diversity in this industry. You're pulling a lot from technology talent and financial services talent, both of which, have their own diversity issues. So
Yeah.
it is a struggle, but there are some fantastic diverse talent out there, and certainly on gender diversity, but also racial diversity and other metrics. It's something we're cognizant of when we program our events, and it's never at the level that I perhaps wish it to be, but we did have so many talented women and people of color present at our conference just a couple of weeks ago. There's some firms that are making really, really great strides in this. And I think, you do have the knock-on effect where if you do have a diverse firm, it becomes easier to hire more diverse professionals because they see someone like them succeeding in that organization where, folks are always going to be a little bit more cautious if they are the only at an organization, because that's a tougher road to go down. So there are some initiatives in the industry, which is great. Most of them are informal, but I'm part of various women in digital assets groups and meetups. Remember, one of the most fun things we did in the last cycle was going axe throwing together. That was a
Oh, that
really
sounds
a really
really
neat
fun.
opportunity, but also on the more educational side. So something that I did in addition to my work at AIMA, I am also on the board of the Black Hedge Fund Professionals Network because, again, in addition to all of the work that we need to do on more female representation in this industry, our racial representation needs a lot of focus and work as well. So I helped organize a session for that group a couple of weeks ago about careers. Again, we see more and more folks making the shift from hedge funds to crypto. So what is that all about? We brought in one of the most prominent investors and then had one of the members of that group interview him to talk about what are the opportunities, what are the sorts of things that they look for when they're hiring, why he's excited and why he made that shift from hedge funds, and just open himself up to questions. So I think the industry has to be intentional about it, right? I get folks who say, well, I just don't get anyone applying for my jobs. And it doesn't work like that. You do have to be thoughtful about, how are you writing the job description? Is
Mhm.
there potential bias in that? Where are you circulating that? Who are you circulating it to when you're evaluating it? How are you making sure that you're being thoughtful about, a lot of firms take the names off the resumes, for example, when they're getting to that. And then, if you're lucky enough to be able to extend an offer and get that offer accepted, how are you retaining and growing that talent? It's not enough to bring them in, but
Mm.
you do have to make sure that they're set up for success. And, again, a lot of these firms are small. A lot of these firms are startups. They don't have necessarily super mature HR departments or an HR department full stop. So it's helpful sometimes to have these, these alliances and these relationships that go across firms so that folks can create their own affinity groups as well and find ways to support one another. So I'd say, again, long answer, but there's some really talented gems out there that I'm so happy to succeed or see succeed and cheer their successes. And we still have a heck of a lot more work to do to continue to grow and diversify.
Yeah, I share your sentiment is that we definitely have to be intentional. We have to be purposeful. And there is a lot of work to do. And we're trying to do our part. We try to bring on as many guests as we can. We try to keep it diverse. I think one of our, and the funny thing is actually our most watched episodes, our best content, the best, I guess most meaningful content comes from when you bring on different voices from different backgrounds, from unique perspectives. So it's in everybody's best interest to have that type of environment.
Yeah. And I think a lot, for all industries and nature, right? Oftentimes you get focused on the loudest voices, but sometimes, again, it is those fresh perspectives that can be really compelling and just, be the best things of an interview, right? Something new and novel, which if someone's tweeting 1,000,000 miles a minute, what else is left to ask of the person?
Yeah. And it's funny too, because a lot of people may be hesitant to come on, and sometimes it's incumbent on the person who's trying to engage that maybe push a little bit, because sometimes people just need that little extra nudge to feel comfortable, because traditionally they just don't, and they have been made to feel uncomfortable, I should say. So that's where we've been trying to be purposeful and give that little bit extra nudge, and try to get that on, so that way, because once you do it, and once you get practice, and once you give them, again, like you said, set them up for success, it becomes a whole different, and it unleashes them. That's kind of what we talk about. We try to unleash them onto the world, as opposed.
No, that's such a good point. And I do spend time myself having, again, been in the conference space and done a lot of this, organization behind the scenes, as well as being the voice out there to coach folks. And, if they're uncomfortable in their first panel experience, finding some easier sort of training grounds for them on smaller events with smaller audiences, and encouraging the firms that we work with, think about someone who's up and coming talent, and this can be particularly meaningful to them versus just another thing on your to-do list. Okay, check it off, and constantly out there. So it does again take more effort, but it's well worthwhile, because you've made such an impact in that person's career potentially. Plus, again, it's new, it's novel, it's a new perspective.
Exactly.
And how important is that?
So important. Oh, see, now I'm getting jazzed up. Let's keep this going. I love this. Thank you so much for, because it's not an easy topic to talk about, and I think again, being intentional with it. So I'm happy we were able to spend some time there. So let's
and again, speaking of twins, so I also have a twin sister in addition to having my own twins.
Oh, wow.
And it's just coming from a family of boundary breakers. So my sister is a software engineer. Our mother was actually the first female police officer in her department. So, I don't come from any sort of financial services background, but I come from a long line of women who are, happy to get involved in untraditional things.
Oh, that's wonderful. Well, you are certainly doing that on your end here too, which is great. Okay, before I just let twinship kind of take over, now I want to.
It really can take over.
It does. Twinship is a thing, everybody. If you're listening, if you know a twin, ask them about it. But so let's kind of use this then to go into so I was at a conference, which was permissionless, I mentioned earlier. I'm in lunch line and I meet someone, we're just networking. Turns out it's someone, I follow, the guy named Greg. I think the fun name is called Heart Rhythm. Greg Kaufman.
Yes.
And so we're in line, we're talking, and I'm, maybe setting up a time to meet. And then he's like, well, I got to head over to this other panel that I'm speaking at. I'm like, oh, where is that? And then it turns out he's going right from Florida to this other conference. So I would love for you to dive in. So take us through. It was the inaugural digital, and forgive me for the name. What was the name of the conference that AIMA hosted?
It's there's so many acronyms in the space. First of all, love Greg. And I think there's a twin story there, but I will leave that aside. It's the AIMA Digital Assets Conference. It was our first one in person. So we did this event on 2 weeks ago to the date, May 11th in New York. And really, as I mentioned, we had started our digital assets work in a renewed basis in 2021. Of course, it was tough to get together in-person conferences at that time. Windows would open up, but there's a lot going on. So we did a virtual conference last summer. We did about 8 to 10 different webinars, but we finally, we really wanted to convene our audience in person. And in thinking about it and thinking about, our digital assets work broadly, right? There's some great associations out there who have been doing the work on the regulatory and advocacy front for quite a long time, but really look across the wide spectrum of digital assets in Web3. Mm-hmm. AIMA, our background and our focus is institutional investment managers. Yeah. We're not trying to do the whole industry. We're really knowing our audience and wanting to focus on that buy-side perspective and their needs, and then be able to engage with all of our other partners and peer associations and be a helpful and useful voice. But, I believe firmly in wanting to be additive rather than duplicative. And this is really where we can add value. So if we look across the conference landscape, there are a lot of really interesting events happening all over the world in the US. But a lot of them tend to focus either on the technical side and be for the devs, or they'll be like the big macro ideas where you can hear how Bitcoin might be changing the world. And our audience is an audience of doers, right? I mentioned that, we tend to focus a lot on the non-investment stuff. So people are not looking to us whether or not they should invest in digital assets. That's not our agenda. I really, that's not my focus at all. Mm-hmm. We are focused on the how. So if you've decided that this is something that makes sense for your institution, whether you are a GP or an LP, how do you do it? What are the needs? So sort of tongue in cheek, I was joking that we were bringing boring to crypto, unlike, the big festival environments at Permissionless and, the Bitcoin Miami conference. But it really was, bringing together these doers and focusing and honing in on the sorts of stuff that you just don't get into when you're at some of these other industry programs, just by the nature of those programs versus our mandate. So, we're lucky enough to get some really great investors to talk about their journeys to crypto, both again on the GP and the LP side. We had a commissioner from the SEC. We got into, the future of Web3 and why it matters, but really the heart of these programs were a series of streams. So we had 3 streams: an allocator stream, an operational stream, and a legal and compliance theme. That was sort of a choose your own adventure to get into the weeds. So, all of the fun topics like tax and regulation and operational risk management, counterparty risk, talent management and hiring and practices in that space, cybersecurity. If you are going to get institutional money into this industry, you have to solve for that. And the most remarkable thing is we had a breakout on custody, which is a real area of focus. Yep. Literally every single seat taken, crowding out into the hallway. Folks can get in on a conversation about custody. So it really, yeah. So it really, we did just also publish a whole paper on sound practices for custody, or industry guidance on custody, that's gotten, a significant number of downloads. So it's a tip off that it's a real area of interest. But I think that was, a real vote of confidence and, just a good reminder, right? I think, certainly, again, you get the flashy speakers and the big, bold names, but when you see the operations professionals and the legal compliance professionals and the operational due diligence professionals and that whole bit back and middle office complex get themselves in gear, something is coming, right? Because they're not necessarily, and they're rarely the ones to decide yes or no. They might have very divergent opinions on the value of digital assets. but they have to figure out how to get it done and how to get it done as safely as possible for their institutions, which, this whole thing is getting built. So it's not necessarily an easy task. So there were, we had well over 300 attendees, a large part from the US, but, a bit of a global audience, and really just folks coming to it at different parts in their journey, which was really interesting to see. So you saw, again, folks who've been committed their careers to it for a couple of years were obviously out ahead and often on the panels, but, a lot of people who are newer to this and just, okay, you mentioned staking. What exactly is that? How can I figure it out? So yeah.
Wow. And this is exactly what we love to dive into on our show is things. And the word that always comes up in my head is infrastructure. And again, when you go behind the scenes, behind the headlines, and you have and this is where we have the opportunity, because, not every person, not everyone can know that we have conversations with lawyers call us up. We at least have 3 conversations with lawyers, and I'm not the one having those conversations. We have my business partner, Matt Kleski, who's our compliance officer. I gladly let him have those conversations. But there's so much building in terms of infrastructure. And so we talk a lot about the institutions are coming. You hear that narrative quite a bit. And yes, they're coming, but they're not going to come until, one, there's regulation that they can abide by. 2, there's institutional grade infrastructure, because that's the one thing we tell, especially potential clients of ours. And, we talk to family offices, partner with other hedge funds to see, what's happening. We have our own connections, and the infrastructure it just isn't there, and it still needs to be built. It's too painful right now. And if you're talking about mass adoption, we just see those 2 as the main barriers right now to that broader mass adoption happening. Did you come away, and I know there was a takeaway document that y'all released, which was great, by the way, but did you come away also with similar findings from that event?
Yeah, I mean, so a few things there. There still is a lot of infrastructure to build out, but, there's a lot progress that has been made. And I think, again, institutions in particular, it's, I don't pretend to be an expert for individual or retail investors, but institutions, right, they're coming into this market because with inefficiencies, there are opportunities for alpha and outperformance, right? So you have to sort of balance off that risk and reward. So just want to leave that there. But in terms of takeaways, yeah, I mean, they're sort of what was interesting to me, right? Against this backdrop, the conference was May 11th. This is when, the second major day of Terra UST depegging and Luna going into its final death spiral. And I was shocked at the level of, I guess, the lack of despair in the room, right? There were still a lot of folks who were actively engaged and learning and listening and, certainly taking stock of what was happening, but it wasn't a doomsday scenario or, a feeling, which was really interesting. Separately, and we're about to publish our findings on this in about a week, 10 days or so, but we've participated in the annual crypto hedge fund report that PwC and Elwood do. So our 2021 findings, which were published about a year ago at this point, really did find that I think about 21% of legacy hedge funds, like this all has you talking in weird nomenclature because hedge funds are alternative or like traditional alternative hedge funds, but essentially those that are not dedicated exclusively to crypto. Last year, we found that about 21% had exposure to crypto. And, the main obstacle for them in terms of those who did not invest, as well as those who were invested yet still cited challenges, was that lack of regulatory clarity. So that certainly is still there. And, that still remains. But I think folks sort of recognized we're not going to get fully there in the short term. So let's continue to build. And again, trying to get industry consensus around common practice is something that's really, really important. Why AIMA has been so robust, because it's exactly what we do. Again, we're not putting out standards to be clear. It's just really articulating what is everyone else doing. So we started with that custody guide. We're now at work on a guide to trading and execution. We're also working on a module for our due diligence questionnaire about, what questions allocators should ask when thinking about investing in a digital asset fund. And so in the absence of clear regulatory guidance, I guess everyone's looking at, okay, well, at least what is everyone else doing to feel comfortable? And there's a lot of knowledge sharing that goes on. I mean, that's what I'm really heartened about, just the level of participation, because everyone is sort of there in the trenches, building, going through it. And, an operational failure in this industry will blow up in everyone's faces. So you do have folks that, might be competitors of sorts, but still happy to work together and help navigate and build this industry and get it to that institutional level. So I think that's what, I was heard from the conference, but also, against a larger backdrop of what we're doing.
Mm-hmm. You speak to something that we get excited about, again, beyond just the assets themselves and the technology. It's this idea of collective intelligence and how you have organizations and groups coming together who would never come together and come together around this new technology to bring it to the world because they see the potential to have a positive impact in many different areas of life and for just regular everyday people. And so that's what we love. Traditionally, people, what we like to say to ourselves internally is that in this industry right now, it's not about taking your piece of the pie. It's that let's make the pie to where everyone can have a big enough piece and no one worries about getting their piece. Everyone's going to have their piece. And it's about collectively growing the pie together. And it sounds like that was very much a kind of what you're seeing and what you get the sense of collaborating with all these different people within AIMA.
Yeah, no, I think that, again, if you talk to the investment managers and, it's really education is such a big part of it when talking to allocators, right? It's new, it is complex, it is a real mental leap. Plus, there's a lot of career risk on the line if you are the individual at an institution putting your neck out for something like this. So, you have to spend a lot of time educating folks on just the basics of digital assets and what this looks like. And then, we're also at a point where there's an interesting diversification of strategies that exist, right? It's no longer just long only buy and hold, although that certainly exists both for single tokens as well as a diversified basket of tokens and passive exposure. But you have venture capital, you have more actively managed long only strategies that fall into, perhaps a hedge fund bucket. You have market neutral strategies, you have yield strategies. So, there's, first you get into the why digital assets discussion, then you can talk about the merits of different strategies. And then only then do you get into why my firm or my investment strategy over another. So, everyone's still working on that, that first layer of just what is this and how can we help you get comfortable with it? How can we work through some of these risks? And that's a really, really important part of the process. And it's something that can be done collaboratively, which again is why we've seen such a high level of engagement.
Yeah. And I do want to get into education to end us and round out this episode, because again, our North Star is education. But before that, I'd love, because you mentioned the word risk and we've talked about it a little bit. Is there anything that concerns you or any specific risks that you see to the industry or, as people start going into something that people should be paying attention to maybe a little bit more that they're not?
Yeah, I mean, there's a whole host of, operational risk involved. I mean, there's market risk as well, but you would hope for, again, the whole trick of investing is getting compensated for that market risk and really understanding it. And, the tools are still evolving. So we don't necessarily have quite the same nomenclature and toolkit as we do in traditional markets, but that's coming. Operational risks are those things that you're typically not paid for. So a lot of times that's where we tend to focus. And it's really understanding everything from cybersecurity, right? I know the best way to become really vigilant about cybersecurity is like dip your toe into crypto, because you recognize how
To be, yeah.
Fraught every single step and process is. But from cybersecurity to counterparty risk to a whole host of different environments. I mean, it's interesting. So institutional investors have typically have a whole department called operational due diligence, either internally or as external consultants that kick the tires. And they are so empowered in this space because there's so much for them to learn. And, there's so many new players. It's not the same Wall Street names. There's some of those names, but it's a lot of new names and faces that folks aren't familiar with. So having to delve into their business models, having to delve into their terms and conditions, it's really, there's a whole lot to watch for and get comfortable with. So it's actually, it's against this backdrop, it's heartening to see how much progress has already been made.
Couldn't agree more. And again, I really appreciate that, because a lot of the times we get so focused on the shiny things in crypto, what they're bringing in, the benefits. It's really important to talk about, those risks that still exist, and they're important to be really cognizant of. And it's always interesting to hear from Matt, our compliance officer.
Yeah, and you're going to have to take some of that, it's discerning, what are the risks that you're comfortable with, and you just sort of have to accept if you want exposure into this ecosystem. And then what are the true red flags that, just are a full stop, and, be comfortable with stepping away, even if others are in and it looks shiny, but, you've just from your own process decided that's not something that you're willing to accept.
Absolutely. Well said. So let's talk a little bit now about that education, the education gap, if you will. And I'd love to kind of dovetail into kind of what's coming with it. You've mentioned a few of the things coming, the studies, the other research papers that are coming out. Take us through. Is this what we can expect to see from AIMA moving forward? Is there anything else coming? Talk about the education.
So the pipeline is robust. It's always the bandwidth that is the problem. But
we hear you on that one.
Yeah. So as I mentioned, the next thing to look out for, because it'll be out in just ahead of the consensus conference, will be the 4th annual crypto hedge fund report. And that's a great one because, again, with our partners at PwC and Elwood, it maps out the crypto hedge fund industry. And they've done year-over-year analysis now for 4 years running. And then for the second year, AIMA will be layering in a chapter that looks at this adoption by the wider hedge fund industry. So that will be coming out. That'll be a public document. We are hard at work on a guide to trading and execution, working on that due diligence questionnaire, which that will be a member-only document, continuing to program webinars. So now that we've gotten this big block of a conference out of the way, continuing that educational cycle through smaller bite-sized pieces of content that, is not just programmed by me in the US, but, we had our Canadian colleagues host a session on the digital asset industry in Canada just a few hours ago. We have a conversation on custody that picks up from where that guide in April left off, coming in June. And I have a whole host of other ideas bobbing around in my head that need to make their way onto paper and getting speakers for. So, the great thing to see was that enthusiasm out of the conference. And everyone's like, okay, when is it next? Do you have to wait a whole year? For my sanity, probably yes, for a full scale conference, but we will sort of pick up some study groups and let folks digest what they learned there and ask those questions, because again, a lot of this stuff is new and not intuitive, and we need to have the space where people don't feel stupid for sounding a question. I don't know, I'm still working through some of these concepts myself. It takes time, and we're at a point, I think, where it's hard, right? No one can be an expert on the entire digital asset ecosystem, because also we're spending all this time talking about crypto. I still do cover hedge funds and private credit. It is one of many things that I do. But even for folks that are full-time in crypto, we've seen such a growth of the space where now you have specialists who are just in DeFi or just in NFTs or just in gaming, and even the generalists will admit that they can't know everything in the same level of granular depth as when it was just Bitcoin and Ethereum.
Amen to that. One of the things that we let everyone know is we definitely are part of the generalist camp. So while we, high level and maybe one layer down from that, we're pretty versed, but it's such a big industry, and not just that it's big, it's everything happens so fast, and it's the first time it's global. And that's where, again, I think the thing that excites me the most about AIMA is that it's global reach, and that's where a global community come around on this. So I'd like
Yeah,
to,
and we had such great, I mean, we just had one of our quarterly calls wrap up about 2 hours ago. And, we had folks in Singapore and Hong Kong dialing in at 11 p.m. their time, which is
ah,
very
that's so
grateful
cool.
for. But it truly is a global 24/7 industry.
Mhm. It's impossible. And that's where we say one of the, so we, a lot of managers, firms that are doing their due diligence, we hop on calls with them. And one of the things we share with them is here are the red flags to look at, because a lot of times we're their first call for some reason. I don't know why our name is out there. Maybe it's because we're pretty active, but a lot of the first time they just don't know what questions to ask. So we always like to leave time at the end to say, hey, I appreciate the time, but here are some questions you definitely want to ask. Can you support 24/7? These markets never stop. The other thing is always making sure that if anybody tells you that they are an expert on the crypto industry, that is a red flag, because even though I spend all my time in this space, there is always a project. There's always something new. There's something that comes across my desk. I get an IM from one of my team members who's on the traditional side, who spends maybe 1% of his time in crypto world, who then says something I've never heard of. And it's always just such a humbling, it's humbling every day to kind of go through that. Whereas in the traditional world, I didn't feel that nearly as much.
Yeah, you definitely can't fake it. And that's why I'm actually so excited about the due diligence questionnaire as well, because it's a lot of folks just don't know what questions to ask and, what's different. What are the crypto specific risks and the crypto specific questions? And a lot of fund managers also, especially if they don't come from a money management background and they're maybe more grew up in tech, which is what we see frequently, they don't necessarily know, first of all, why this person is annoying them with so many questions, but also, what are the typical expectations? And the whole idea is if you can do it once and pull it into, put a lot of work into something that, hopefully a wide number of folks will accept, it just makes it more efficient. And then folks can actually spend their time on the analysis of it and less, on answering questionnaires.
Well said. And I think that's a great place for us to wrap things up. But I always love to leave the last minute or two. Michelle, where can people find you? If people want to join the community, want to join AIMA, learn more about it, please let everyone know.
Sure. So the best way, I am visible on LinkedIn, so you can find me on my name there. I am on Twitter, although it's still a work in progress. Michelle Noyes _. I think someone took my full name. And then you can also find us at AIMA.org. So that's AIMA.org. And, we'd love to hear from you and love to talk to you and be part of that process.
Michelle, it's been an absolute pleasure having this conversation with you. I can't wait to bring you back, and I can't wait to see everything that you continue to bring to this space. Thank you so much. And for those listening, thank you for joining us, and we'll see you next time on the Asset Revolution podcast.
Thanks, Mark.
Okay.
Are we clear?
We appreciate you listening to this edition of the Asset Revolution podcast. I'm your host, Marc Nichols. Please don't forget to let us know how you like the show by rating and reviewing us on Apple Podcasts or wherever you like to listen. For more downloadable digital asset resources and educational opportunities, please visit us at arbordigital.io. We are here to help you get off zero safely and securely. Thanks again for tuning in, and be sure to tell someone you care about them. Cheers.
We are financial advisors. However, we are not your financial advisor. Unless you're under contract with or actively speaking with Arbor Capital Management or Arbor Digital, a division of Arbor Capital Management. This podcast is just that, a podcast. It is not financial, legal, or tax advice. If you have individual questions, please reach out.